Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. If you're new to my channel, I try to simplify investing strategies to help look at the markets in ways we can maximize our value and enjoy investing with a low to medium risk tolerance, or for people who are new investors. Of course, consult your financial advisors. Look at doing something like money markets or Roth IRAs first. But if you have extra money and you're looking at ways to gain the amount of value when you're putting in, I think my channel is going to be good for you. We take a look at stocks and cryptos. So today, this video, we are going to be taking a look at the stock market and some important things coming up. Of course, let's start with fear and greed. We are in extreme greed on CNN's fear and greed chart, up at 77. And on pie investing, which I like their charts a little bit more, we are at greed, just under 75, but we've been trending down. So might there be a correction coming? Usually greed peaks around the time that markets peak. This was the last good time to buy here, and we've just been aping up ever since. So I've been keeping money on the sidelines, and for some people during this time, it's been hard because stocks have been running so fast. So we're going to be taking a look at some of those, as well as some earnings reports, important stocks that are going to be coming out this next week for earnings, especially NVDA. That one is going to be big. So here is a macro look of the S&P, and I drew this channel. It's been going back really since the 2008 financial crisis, and from the bottom, as you can see here, the bottom of the great financial crisis, one of the bottoms in COVID, we've been up in this channel. I have it on log. It seems to show more of realistic expectations. And here, this upper part of this channel is when we've topped out. So we topped out here after we had the COVID crash. Do I think we're going to top out there again? Probably not. If we did, that'd be reaching levels around 6,000. I have to zoom out a little bit more. We'd be reaching levels around 6,000 to 7,000. I don't think that will happen yet. I do believe we would need a large correction, probably even a recession first in the coming year or two. Rate cuts are going to be coming, and usually when rate cuts happen, that's when the markets tank. And I know that seems opposite of what markets should do. Usually when we get rate cuts, you would think that that's good for the market. Well, true. However, it is more of a lagging effect. So the white lines, this is when inflation has peaked, and markets tend to dip with peaked inflation. The red line is when we begin to see rates cut by the Fed after they've been up high for longer. And so you can see there's a 2020 crash. People were thinking there was going to be a recession anyways, because we had these two big dips. And so would something have happened without COVID? I think so. And I think without COVID, it probably would have been a more steady recession. However, we bounced and flew back out of there because not only were rates at pretty much zero, but we also printed 6 trillion out of thin air over time, which peaked the markets. We had a big correction down here till late 22, and we're peaking again, new all-time highs. And a lot of people think that a recession is coming. And another reason for that is if you look at yield curve inversions, usually big recessions happen after the yield curve. This is measuring the bond prices, which are correlated with rates, after it uninverts and goes back above zero. And as you can see, we are green here, and that means we're bullish. And this thing always uninverts eventually. So when might it happen? Maybe close to the Bitcoin halving. So other times you can see it dipped under here before we had the COVID crash. It dipped under here before the great financial crisis. And of course, this is the dot-com bubble. You can look at more data in the past. Let's go back again. So the red line, again, this is when rates are first cut. And let's put this on log. When they are first cut. So you can see that's pretty close to the top of the market. So when they cut rates, I'm not saying a crash is going to happen immediately after, Sometimes it can take a while. So you can see this was the first rate cut, December of 2000. We didn't really have the bottom until almost 2 years later. You can see at the bottom, October of 2002. So almost 2 years. First rate cut, August of 07. The bottom, March of 09. So a year and a half, 2 years. I think this data is more applicable. Again, first rate cuts, this was more of a soft landing, like they've talked about. However, when we look at the yield curve, the inversion here in the late 80s, it wasn't as bad. Let's jump back to that quick. The late 80s. Well, I guess it was kind of bad. Never mind. So I stand corrected. I'm willing to admit I'm wrong when I'm wrong. And back here, again, rate cuts, big move down. I know some of these may not look as big, but at the time they are. And so if we just measure from the top to the bottom there, 25%, anytime you're getting a 20+% correction in the markets, good time to buy. First rate cuts, we were already going down, and we peaked at the bottom here. This was when we had the big inflation problems in the 70s, when we had those 3 spikes in inflation. So that was those inflation spikes. That's in the white lines here. Those coincided with market bottoms until here. By that time, we were ready to start shooting up through the 80s. So something to look at. Let's take a look at the VIX. VIX is the volatility of the markets, and as you can see, these volatility waves are getting bigger. We got close to 20, and when the VIX goes up, let's zoom way out here. When the VIX goes above 30, 35, that's when we have those big dips. So April 2020, again, March, that was a COVID bottom right there. Back here, obviously, great financial crisis, dot-com bubble. You guys get the point here. This is the volatility of the markets divided by the volatility of the volatility. And what's important to note here is when we have these dips, when you do it this way, VIX divided by VVIX, that's when we have market tops. And when we have peaks, that's when we have market bottoms. So here we, as I showed you guys before, we are in greed, extreme greed. Could prices go higher on some of your stocks? Sure. However, you could argue that we are due for a pullback. And how bad's the pullback going to be? Well, we're going to find out. Bitcoin, that's another asset that since the last year, December 22, as you can see, we've gone up an insane amount from around 15, 20,000 to 52,000. So you could say pretty much a 2.5, 3x there. Let's take a look at NVIDIA. NVIDIA is important because earnings for NVIDIA are coming out next Wednesday. Keep an eye on that. That is the most important earnings next week. We have off Monday for President's Day at a lot of places. See, when I look at stocks, by the way, guys, I take a look at stocks I like it and use. This is, by the way, this website is NASDAQ.com. So when I look in here, and it's sorted by market cap, what are stocks I like and use? Now, I don't really go to Walmart. I'm more of an Amazon guy. That's why I track the price of Amazon more. I do like and use Home Depot, so that's a stock I look at. I believe it's a dividend stock too. NVIDIA, we all use NVIDIA, and we like and use their chips. If you don't like and use NVIDIA, I don't know, something might be wrong with you. Garmin, that's a product I like and use. Rivian, that one's going to be big because we've had NVIDIA tanking since its IPO, and there's been bearishness in the electric car market. I do think long term, though, it has a lot of potential. Nice looking cars. I'd rather have a Rivian, just by the looks, than a Tesla Cybertruck. And then Intuit, it's tax season. That might be important. Booking Holdings, we'll take a look at Booking. I like and use their product. When I travel, you can find great deals there. Moderna, don't want to get political, but something to look at. And Berkshire Hathaway, Warren Buffett's baby. I am curious to see how that's looking because Apple has shown some cracks, and that is important to watch. If Apple goes down, Berkshire is going to be affected. I believe Berkshire, they have like $1 billion Apple stock, something like that. And with Apple valued at what, $187, that means Berkshire has around 200 billion worth of Apple stock. Crazy when you think of it. There was a report recently saying that Berkshire showed a million or 10 million shares of Apple, and it's like only 1% of their holdings. And you do the basic math, it's like, oh my God, they have a lot. So yeah, here are some we are going to look at as well. We're just going to do a quick look over at stocks. Coca-Cola Euro Partners, maybe we'll just take a look at Coke. So let's go to the charts. NVIDIA, what do we see here? Well, this indicator I have on the 10-20 moving average crossover with Heikin-Ashi. Right now we're on the monthly. We haven't had a monthly buy or sell signal since late 2022. And NVIDIA has gone up from 140 to, well, 743 is this top level here. So it's gone up a lot. If we go down, click the 5-year, and it puts us on the weekly, as you can see, we haven't had a buy signal since here when we had all this accumulation around this 400 range. We had a buy signal here around 400. Let's measure that move and see how high it's gone up. So it's gone up about, for 2 months worth, it's gone up 60%. No, a lot of people have been comparing NVIDIA and the AI narrative that's going on now, pumping the markets to that of the dot-com bubble. And when stocks like Cisco, which have similar charts, ran up, and so people have been wondering, hey, is NVIDIA kind of this dot-com bubble versions or AI bull market version of Cisco? Maybe if there was a recession to come sometime soon, how big could something like this fall? And so you'd be taking a look at these 400 levels, and just where there's a lot of structural support, maybe around 200 at the absolute worst, I would guess. But I like NVIDIA, and AI is the wave of the future, so definitely something to keep an eye on. Another thing to keep an eye on, SMCI, Super Microcomputer. This stock has run up like a freaking crypto. As you can see, it was at 20. Like, if you would have bought this stock, even in the last year, let's take a look at where it was in January of 23. Let's go way back here. January 23. It was at $80, and right now it's at 800. It touched 1,000 very recently. It was over 1,000, and so it's done a 10x in a year. Again, that's better than a lot of cryptos that I know about. So, and also, guys, you see here, there's some red. Nothing super big yet. I did want to show you Apple quick. Sorry, squirrel brain here. Apple, as you can see, it's chopping around through its moving averages. If I showed you a bunch of different moving averages, you'd see it's getting under some of the top ones. So some cracks forming, and Apple's a big part of Berkshire Hathaway stock. Let's go over to Berkshire Hathaway, A or B, doesn't really matter. So yeah, Berkshire, it's been green since, well, back here. And this move, how much has Berkshire gone up? It's gone up about 14%. So with some of these buy-sell signals, guys, if you want to be a very patient investor, at the very least, you could just throw this on the monthly, some of these indicators, and wait till you have a monthly buy signal and then write it out. And sometimes, usually it'll work, sometimes it won't. Okay, we have buy signals in here. You could have dollar cost average in and then seen it go down. However, look at this. It was only at 200, and right now we're double at 400. So you do have to be patient. What I try to promote here at Market Psychology is, again, to look for value when there's fear. And when there is fear, that isn't when you sell. You sell when there's greed, or you just hold it for very long times. Me personally, when I look for stocks to buy, I'm looking at a stock I like, something I use, and something that I feel comfortable holding for 10, 20 years. I want to believe that product is going to be around in that time range, at least that far down the road. So yeah, NVIDIA, like I was showing you, it's been very bullish. But when we go to SMCI, this is the final point I wanted to make, that, well, you can see here on the daily, we have this long-legged doji forming. As we zoom in here, after we got up above 1,000, This to me is very important. You see this move? Let's measure it out. It dropped 25%. That's no joke. Now, that's to be expected when stuff like this happens. As I was telling you, this reminds me a lot of cryptos that I've seen, especially during the 4-year cycle bull runs. If you don't know what I'm talking about, crypto, Bitcoin every 4 years about is when it peaks. Same with between the bottoms. If you buy when it's down here in these green blue zones, overall it's good, and then you sell when it's in the orange to red, or altcoins similarly. SMCI has been one of those AI stocks that has just aped up. So here you can see on the RSI, we've gotten oversold. Maybe it's going to hit up, come above it, and then come back down. And that's something you're going to have to watch. As it stays oversold, is the price going to drop further? Okay, when it goes back up, is it going to go up higher? Are we going to see bullish divergence, lower price, higher RSI, or are we going to see bearish divergence, lower in the RSI and higher price? We'll see. So right now it's just been overbought for a while, and for me it's too soon to really see what's going to happen macro wise. However, with these stocks and the AI narrative, not financial advice, I would not be touching any of these right now because of how much they've ran up. Again, just click this measuring tool. If you are looking at something over the last year and it's at a yearly high and you just measure it out and you see that something's got up 1,000% or it's gone up even 5x or 4x, I wouldn't be buying it because that's ridiculous, especially because this bull run has not come out of a recession. This bull run hasn't come out of rates that have already been cut. Rates have been high for long and there are cracks showing in the economy. And so, yes, markets can still run when rates are higher. But again, is it retail pumping or is it hedge funds? And as far as retail money, you can look at the rates of unemployment, bankruptcies, all those things are trending upwards. Are they at critical levels? No, not yet. However, the time to buy these stocks isn't here. The time to buy them is when they're accumulating, when they're oversold, when there's fear. So time in the market, more important than timing the market. Speaking of these, I did have a request. Someone asked if I could look at SoundHound and SoFi. So I'm going to go into those. If you have any requests for charts for me to look at, comment below and I'd be happy to take a look at it. Now, this is just me, not financial advice. Make your own decision. Look, it's overbought. Look at this move, how much it's gone up. I would not be buying this. We had a buy signal back here. You can see that green dot below, but it's already gone up 140% inside of a week. So could it go up further? Sure, it could. When we zoom way out, yes, it could be an earlier stage of something that might shoot up. Here's where we would have to consider market cap. So 950 million market cap, 940. So let's just say a billion for simplicity's sake. So if you put in 1,000 right now and you wanted to 2x your money, then you believe this could hit a 2 billion market cap. Not the craziest idea with the whole AI thing. And we are seeing a lot of red in the market, and maybe we're going to see red until NVDA reports, and then things are going to pump up more. So because we're seeing red in the market, that might create an opportunity. However, I wouldn't be buying here because we already had a huge move up. If you were following, if this is a stock you like, you would have been following it closer and buying when we got this green signal, okay? Not after it's already made a big move. So I'm not saying it can't run bigger. However, the time to get it is no longer now, in my opinion, even if it does run up more. Otherwise, SoFi, and again, something like SoundHound, I would say is more of a trading play than an investing play. So whatever you're going to do so at your own risk. SoFi, it looks like I have looked at this before because I have fibs drawn out on here. And overall, higher lows, nice steady move up in the relative strength index. We have a buy signal on the weekly, so that looks pretty good. If I go to monthly, we had a buy signal here, and look at where the body of this one started, around 783, and we're only at 836. However, when we look at the monthly, what do you see? You see a sell signal. So with this sell signal wicking down, I do wonder if it's going to get down to the $7 level, and I would look for a reversal there. Again, on the weekly, it says bullish, and so maybe that will reverse the monthly sell signal. However, I like to honor the larger time frame signals more than the smaller time frame. The smaller time frames can show you how you can possibly front run an asset and get ahead of it because maybe the daily and weekly is looking more bullish. However, the larger time frame macro buy or sell signals are more important. So this is an indicator that's more front running. If we take more of a lagging, confirming buy sell indicator, UT bot alerts, you can see last signal we had here is a sell, not a confirmed buy yet. This is on the weekly, and if we go to monthly, we haven't had a buy since back here. So again, the red is yet to be closed and confirmed to show a true reversal. So, right now, maybe a better investing play, maybe. But yeah, I feel this one could go in either way. If you really like SoFi and it's a product you like, a product you use, I don't think it's the worst time to throw money at it and just wait. So let's take a look at some of the other stocks we talked about. Let's take a look at Home Depot. I don't use Walmart, so if you like Walmart, I apologize. I just feel dirty stepping in that place. I try to avoid it. So Home Depot, what do we notice here? At least on the monthly, look, anytime it's been at around the 50 on the RSI, that typically tends to be a good time to buy, or when it dips. This, of course, is a great financial crisis. So let's clear things up. Let's go to the weekly. Last signal we had was a buy signal. We're up here. And you can see, could we possibly be rounding and coming back down? Sure, maybe. We got a lot of these wicks kind of forming a wall above it. So I would say that maybe we'd be coming back down to like around the 300 level. I'd wait for that, especially because we're overbought. I wouldn't be buying it now. However, I do like Home Depot, so it's a stock to keep an eye on. I know I talked about Garmin before. I already took a look at Berkshire Hathaway. Garmin, I love my Garmin watch. I think it's a great product. Man, when this thing sells off, it sells off hard. It was at 175, got down to 80. And we've been going up. We've recently had a weekly sell signal. Looks like we have this kind of a long-legged doji here, and maybe we're going to be forming a base here around this 120 level. So let's zoom out a little bit more. Monthly, anything? Well, we had this buy signal, but again, this tells me at least that we're forming a wall and we may be coming back down somewhere around the 100 level. If Garmin got to around 100, I might start taking a closer look at it. Let's draw a fib. And where do I want to draw a fib from? I'm going to do this high and low because this was a COVID bottom. So let's go back here, high to low. And yeah, it looks like it's trying to break above the 0.5, but I could see it after we busted through the 618. I could see it settling down on there again. That's around 115. Where's 100? So 100's back here at the 786. If it did get back down here, I would worry about, you can see how there's this trend. I could draw a trend line, but you could see it. Then maybe the trend line way out here somewhere in, that'd be June of next year, so ways off. But maybe a trend line showing us that macro-wise we're going down and that we'd be forming a wedge here that we might be chopping up, down, wedge, and then taking off after corrections happen. So Garmin, yeah, maybe the start of a DCA play here could be around 116 and then long term 100. But again, something me personally, would put in at those levels and then just forget about it. I did want to look at Coca-Cola. We looked at NVDA. Any others? We looked at Garmin. I'm just looking at stuff I like and I use. Let's take a look at Intuit and Booking. Because I use TurboTax for taxes sometimes. Great product. And yeah, as you can see here, We are getting close to having an all-time high for Intuit. So it's already made its move. I wouldn't be buying now. And if we go on the weekly, yeah, it's still trending up. So yeah, it looks like a strong stock, but I wouldn't be buying it now. I'd be waiting more for a sell-off. Booking, man, what a strong move that is. So from September of 22 to now, let's measure this out. We've gone up a lot, 134%. I like Booking. I like their product. I use their product. But again, I might be waiting for a move back down to maybe this structure, because you can see we have this here and here, maybe to start, and that would be about a 40% move down. But there's a lot of structure in here, and if there was any sort of big sell-off like that, low to mid 2000s level, I don't think would be the worst if you're willing to be patient. Any others? I know I wanted to take a look at Coca-Cola, even though this is a Europe one. We're going to just take a look at regular Coke. Yeah, let's do that, and then we'll end it there. Maybe I can keep the video under 30 minutes for once. Sorry I talk so long, and even when I kind of vet my videos, I'll play them in 2x speed, and I kind of recommend it. And guys, I promise, I'm trying to talk and get to the point as quick as possible. I think it's the consultant in me, the educator, the salesperson, the psychologist, aficionado. So I apologize. I promise I'm trying. But I'm also trying to be mindful in what I say to you guys, and thoughtful, and really share information in a mindful, caring way to connect with my audience. So I hope you understand. But yes, do know I am trying to be mindful. Coca-Cola is something I've noted. Similar look to Tesla, how we've been bouncing off this descending trend line. Tesla is just going for its third bounce. So if you get Coke around 30, I think that would be pretty great. Buy, sell. We have a sell on the weekly. How about the monthly? What do we have on the monthly? Monthly, we had a buy signal. We've gone from 57 to 61. So not too big of a move, but at least, yeah, on the weekly over here, I want to draw a fib, but I want to do so where we have a lot of structure. So we have that sell signal here and that buy signal up there. What might we be looking at? So where is 50? 50 is down here at the bottom, of course, and I'm just looking where there's a lot of structure. Maybe more realistically, in the short term, you could take a look at 57.5 as an area to DCA. But yeah, if it got down to 50, that would be very bad, obviously macro-wise. But dang, I'd have a hard time not buying a lot of Coke stock if it was at 50. So anyways, guys, I'm going to leave it there. Keep an eye on NVDA earnings this Wednesday. That's going to be very important. Maybe we're selling off into one final NVIDIA pump, or maybe that SMCI stock that I showed you is showing the first cracks of something that's going to be happening pretty soon. I looked at historical charts sometime earlier this month, and what it looked like is later February, early March tends to be a sell-off time. Not that it has to happen. Again, averages are just, data gathered by total overall, but there's good ends of February as well. So I don't always put too much weight into it. But overall, that is the norm during election years to have corrections at the in the end of February. So maybe that's going to happen. Maybe that's going to spook people to get out before one final pump and then dump. We'll see. I don't want to get too much into the prediction game, but yeah, keep an eye on NVIDIA. Keep an eye on SMCI stock, and please be careful with these. This stock has run up in the short time frame it did the most ever. It's the top 2 runs ever in the stock market. I read this somewhere, can't confirm it's true. The only other stock that has beaten this out in this strength of move and time was GameStop. And you remember that? So actually, sorry, I have one more thing to talk about. Oh God, I thought this guy was almost done. GameStop, this is something to note. When this topped, when was that? January of 21. Where was crypto in January of 21? Well, I know where crypto was. It was near the top, or is closing in on the top. It was right here, is that last correction. Bitcoin had one more surge up, and then pretty much is just chopping and dead. This was the time to get out of crypto. Where was the S&P in January of 21? We have to go way back here. So this was obviously the COVID crash, January 21, right in here. So just something to think about. All because GameStop sold off does not mean the markets have to sell off. Crypto did have one more pump. We had the S&P still was able to go up a bit further. So all because SMCI, which has been the strongest move since GameStop, and plus SMCI obviously probably has way more utility and usefulness than GameStop. That freaking place, you try to return video games and they're like, oh, I'll pay you 20 cents in store credit for this brand new game. Place sucks. But anyways, just something to keep an eye on with the whole AI semiconductor stock narrative. So leave it there. Enjoy your weekend and take care, everybody. Bye-bye.